I'm Sophia Duffy, professor here at the American College, and I'm joined today by three of our esteemed alumni to talk about tax planning services. Terry Parham Jr. is a co-founder and financial planner at Innovative Wealth Building. Angie Ribuffo is the president and financial advisor at Ryan Financial Strategies, and Drew Gerling joins us as a wealth advisor from Thrivent. Thank you so much. The college recently conducted the Advisory Services Survey of over 400 insurance professionals and financial service professionals from across the industry. And we found that just over half of the insurance agents and registered representatives utilized tax planning strategies and conducted tax planning for their clients. Many of these, in fact, more than half of them, were duly registered IARs. Terry, we'll start with you. What is the importance of tax planning for your clients, and how frequently do you utilize tax planning strategies?
I think that tax planning is critical because almost any person could benefit from a lower tax bill. In addition, the people I chat with every day are often interested in taxes anyways, and because the tax code is so long, they typically don't really understand it, and even if they get tax returns, they don't really read them. So as far as I'm concerned, if you're not doing diligent tax planning, you're most likely leaving money on the table because people are maybe paying penalties, they're missing out on deductions, they're not doing some simple things that could save them hundreds, maybe even thousands of dollars year in and year out.
That's a great comment. And for the panel, which strategies do you find that you utilize the most for your clients?
I was just going to add just one quick thing at the end of that is I think it's the one element that joins all of our clients together. It's the one thing they all share. Right? We can look at any other element of financial planning and it doesn't apply to every single client. This one applies to every single client. It's the foundational element on which their entire plan is built above. And so I think that's why it's critical that we all have that skill set to be able to deliver that to our clients pretty much at every meeting.
The survey also asked about other tangential services provided, like capital gains harvesting, asset location planning, even business owner planning. Drew, for the services that you're providing, how frequently are these actually requested by your clients? And in the inverse, do they need these services and not realize that?
Yeah, that's a good question. Just very recently, we were talking about this, and the next business day I received a lead through our website from a couple near my office that said, we need someone to help us with tax planning. And the timing was absolutely exceptional because I knew we were coming here to talk about this today. And so I think 95% of our clients are anticipating and expecting that we do that for them because they don't know what they don't know. And I think a lot of that, they feel like taxes are an immovable object. Like it's either, this is the amount of taxes that you owe. Yep. And there's no way to pull a lever to change a single item. We can't do this differently. We can't do that differently. And I think on top of that, a lot of times tax preparation people don't see beyond the hood of the car. So we're looking at this year's tax return. We need to be looking at tax returns potentially 5, 10, 15, 20 years down the road, and what sort of small changes can we make today so that surgery isn't necessary in the future. And I think it's, like I said earlier, I think it's a fundamental element that we do with every one of our clients.
Angie, what percentage of your conversations with clients revolve around tax planning? And are there situations where you can't provide the services that the client needs?
Yes. So 100% of my conversations with clients are about tax planning because the demographics that I have, many of them end up owing every year. Excuse my voice. So I want to make sure that I understand what's going on. So I require my clients to bring in their tax returns every year. When I can't find an answer, is a great time for me to partner with other tax professionals that are out there. But most of the time I've found that clients just aren't taking advantage of everything they can, right? Mm-hmm. They're not fully contributing to their 401k, right? They are confused between a Roth and a traditional, and what's taxable, deductible, and what's not. So a lot of it is education as well.
Yep. And also, many times clients might have incorrect assumptions about what their life will look like in retirement. Maybe they think they're going to be in a lower tax bracket, or they think they're going to downsize, right, and then that may end up not being true.
Well, I ask them, do you really want to live less in retirement than you do today?
Yep.
And most of them are no. Well, then you're going to be in the same tax bracket.
I think it's a very common misconception. I think historically speaking, it may have been accurate to say that you'll be in a lower tax bracket after you retire than when you were working. And I think there's very few instances that I've run into recently where that's the case. And I think, in fact, there's certain circumstances where, especially given the expiration of our current tax code here in another year and a half, you're going to be in a higher tax bracket in retirement than you were when you're working. And if we don't address those things now, those tax returns early in retirement are going to be bloody.
Terry, we know that certain demographics will need specialized types of advice. And one of the most complex clients that we can serve is the small business owner. How do you approach those types of conversations with small business owners as opposed to a conversation with a non-business owner?
Yeah, so where I live in Los Angeles, almost everyone is a business owner of some sort, be that their primary income or just a side gig, side hustle. Critically important to understand how that works. More than 100% of my conversations are about taxes to some degree, because questions from how should I do an LLC and how does that impact my taxes? What's a reasonable salary to pay myself? How does that impact Social Security? It all kind of ties together. So the tax questions are just embedded in every single conversation, because they have to worry about things for themselves, but then also the people on their payroll. And then beyond just the taxes and the income, we then have to plug in the retirement plans and maybe the exit plans eventually. So the tax component is huge. So the fortunate thing for us as financial advisors and planners, sometimes the knowledge we have to acquire to help ourselves, we can then turn around and help countless other business owners or people with business interest.
Right.
So we've been able to provide a ton of value around taxes through the knowledge we've acquired internally and then also with external partners.
Great. And Drew, with your service towards small business owner clients, do you ever face obstacles or challenges in getting them the types of advice that they need?
Yeah, time, right, is always the enemy in every business transaction, and I think taxes are absolutely that way. Especially you find successful small business owners that their time budget is already stretched to a razor thin margin, and getting the opportunity to sit down and have a deep discussion around their taxes is typically not high on their priority list or excitement list for that matter. So I think a lot of times when we end up working with small business owners, those conversations can be more of an execution, right? Here's what's happening, here's what we can do, and here's how we do it, and we're done. Right? So it's that, you can kind of remove a little bit of the emotional discussion that we would maybe have with a family around those discussions, and it's numbers, and it's contemplation, and it's analysis, and that's it.
Right, and they're focused more on the day-to-day.
Yep.
Maybe those more emotional conversations can happen when we approach things like estate planning,
Exactly.
for example, right?
Yep. Now we're back into that kind of family conversation again. Yeah.
And Angie, again, shifting gears a little, there's been much focus in recent years on the availability of providing financial advice and the accessibility of providing financial advice towards lower wealth or mid-wealth clients. Have you changed your approach at all in marketing or in prospecting to try and reach some of those clients?
Yes, just a little. Most of the time for that demographic, it's still about accumulation.
Right.
And so it's the thought of, now you want to accumulate, don't you want to keep your wealth? And so we need to look at the long picture. You have a long runway. How are you going to navigate that? And that makes them think that it's not just here in the moment, that they've got to take the long view. And so when I do that, a lot of them will say, well, what do you mean? Well, let's talk about it. Let's talk about your accumulation strategy. Let's talk about what it's going to look like. What's your short term? What's your intermediate? What's your long-term goals, right? And what is that time horizon? Now, let's overlay taxes and what that does. Because I'll tell them, you can accumulate as much as you want, but the one thing that can derail it is taxes. That will derail everything if we're not prepared.
Not prepared, and maybe not taking advantage of some of the opportunities
Absolutely.
available.
Absolutely.
To small business owners, for example, there's so many advantages in the tax code for deductions and other opportunities that they could be missing out on.
Right.
And Terry, how do you stay informed generally about everything that you need to know to service your clients? What's going on in the industry, any educational tools?
Yeah, the most important thing is to just make time to continue to learn more. So I proactively block off days where I don't do client meetings, it's just internal operations, and then looking beyond the hood of the car to see what's coming so we can be better prepared for clients. Through my time in the industry, the American College has been a great resource for me to get knowledge, CE, and just to learn new skills. Beyond that, we're always testing new tools. There's a tool called Holistiplan that we use for financial planning and tax planning. And you can just take a person's tax return, pop it in the system, and get a printout of some high-level important things. Or you can go from scratch and put in someone's data, and then you can simulate. Well, what does your tax bill look like if you're Caitlin Clark living in California versus Iowa or any other state? So it's just critical to have this type of knowledge to be able to help people, because unfortunately the generic financial advice or tax advice out there, it's talking to the median person, which most of the clients we work with are probably not the median person. And that's just on a quantitative level. If you start to get into the values that people have and the types of desires that they have at a personal level, then the generic advice is almost useless, depending on the person sitting in front of you. So the specialized knowledge from the college and other resources is just paramount to provide a bunch of value to the people that we serve.
Right. And anyone else on the panel, any resources that you can suggest as far as keeping up to date?
Yeah, I think technology here, this is one of the pieces that's of high critical importance, because otherwise you're delivering an opinion. You need to, in the circumstances of tax planning, we need to deliver facts and numbers. And in my office, we use a piece of software called Money Guide Pro, and then we also have some proprietary software that we use for some of our tax planning as well. And it's one of those conversations where we're going to get away from the face-to-face, and we're going to look at the TV screen, and we're going to look at a lot of numbers and graphs, which, but that's what allows us to deliver that advice in a manner that actually is quantitative, and I can see a change, I can see a difference, as opposed to just an opinion-based conversation around financial planning topics. And so I think all of us need to be relying on the ability to do that, and not just deliver, well, here's a rule of thumb that we would use for, everyone under the age of 40 should have a Roth IRA.
Yeah.
I'd like to add.
Sure.
I think that we also have to look at the clients from a behavioral standpoint, because if we aren't looking at their behavior, we can't help them navigate change, right? So a lot of it has to do with active listening, and advisors need to become a little bit more in tune to behavioral finance. Behaviors, what does that mean? Who are you as the advisor versus your client? How are they taking in the information? Because
That's a good point. So more than technical knowledge, but actually making that connection and trying to understand why clients may be hesitant, for example, to pursue an opportunity or want to pursue that opportunity that maybe isn't in their best interest.
Goes back to what's their money story.
Yeah, absolutely. And generally, we know when we talk about tax planning, we have to really be aware of the boundaries between tax planning and tax advice. How do you all navigate that boundary? And then how do you explain to clients what services you can provide and what you can't provide?
Yeah, I think that's where you need to be very direct and say, we're here to model changes. We're not here to necessarily make the change on your tax return. That's where a tax preparer needs to step in and actually do that, a CPA or wherever you have to do that. And I describe it in a little bit more of like the 10,000-foot view. I was thinking retirement, we have two avenues that we have to consider for our clients. The avenue number one is the question of adequacy. Do you have sufficient resources to do the things that you want to do in retirement? And then most of the time, hopefully, the answer to that question is yes. And then we move on to avenue number two, which is the question of efficiency. And that's where that discussion around taxes becomes very critically important, because you only have a finite amount of money to last you for however long you have left. And we have to be efficient with that money. And that is that second avenue. And so we use the software I alluded to earlier in talking about that to look at where are the inefficiencies in this transaction, and can we change some of those, and can we model some of those so that that tax return 10 years down the road isn't enormously inflated with taxes from RMDs or whatever the case may be.
Right. Anyone else? Angie, Trey?
Yeah. When I talk to clients, I'll say to them, look, my job is to look in the future.
Yep.
Your tax preparer is looking now. So the goal is the two of us together are going to give you comprehensive picture. That's the difference between planning, which I do, and advice, which they do. I'm not going to do your 1040. I'm not going to do that. But I will look at the data and be able to extrapolate information that will help in planning.
Angie, that's a great one.
Yeah.
I'm stealing that.
Same.
And maybe even to just draw out, here's some missed opportunities, right? For that.
Right.
Yeah, and as far as resources, I tap into all of them. I frequently will Google or find ways to search for resources. There are people that will teach you how to compliantly do tax planning.
Right.
I think KITS's has a course on that. So how advisors can do tax planning without giving tax advice.
Right.
So it's important to walk that line. And when you just look at the data, then you can just show them things they wouldn't know otherwise. We mentioned tax gain harvesting earlier. Most people assume that capital gains are only 15 or 20% or more, but there's a 0% capital gains tax.
Right.
And if someone's below that income threshold and they're not taking advantage of that to step up their basis, that's free money
Right.
that they're missing out on.
Right.
Right.
So just as we would advise someone to not miss out on free money from a match from an employer plan, same thing goes with these tax opportunities. These are softballs that if you're not hitting them can compound to thousands, tens of thousands, hundreds of thousands of dollars of missed opportunities over a lifetime.
Right.
So our goal is to help you not miss those opportunities so you can bank that money and then use it for whatever purpose
Something else.
is of the highest calling
Yep.
to you.
That's right. And it's a wonderful kind of parlay into when you mentioned the KITS's article about tax planning versus tax advice. The college will soon be launching our tax program, which is the Tax Planning Certified Professional, which really does place emphasis on providing tax-informed planning, staying away from what constitutes tax advice, but helping advisors to become more informed about the strategies that they can recommend or identify for their clients.
Yeah. I think it's very important that we have that deliverable to our clients as part of our professional practice. And I think of that scenario with that people don't even understand how the RMD system works. They don't understand this bomb that's waiting for them in the future. And not only that, when it moves down a generation, that they have 10 years to deal with that. And the surtax that's involved in that, because now they have a 10% distribution that must come from that every year that they get to add on top of the money that they're already earning through their normal work, that's going to move them up tax brackets on money that they're already earning. And I think the ability to demonstrate that, talk about it, plan for it for clients is the way that you make clients instead of customers. And I think that's an industry-wide problem that we've had.
That's a wonderful way to phrase that. Yep.
Yeah, I think there's just so many opportunities. You mentioned RMDs, but what about Social Security?
Yeah.
Most people don't understand how the taxation works on that.
Medicare premium.
Medicare premium.
Tax
I was going to
torpedo.
say,
Right.
exactly, the IRMA with Medicare
Yeah.
premiums.
Yep.
And people don't realize that tax-free bond interest can get added back into the calculation for what your income is.
Right.
So they end up paying extra for Medicare to get no better coverage, but just because of a certain magic number.
Yeah.
Yeah.
They didn't know.
Right.
Right.
That's, I think, why I talk about that. It's a reduction in lifestyle without a corresponding increase in care.
Right.
Exactly.
Right?
Yes.
You pay more, you get the exact same thing.
Exactly.
Yeah.
Well, wonderful. It looks like the tax program will hopefully help you all to serve your clients better and help you to stay informed about what's going on in the industry.
Absolutely.
Thank you so much for all of your enlightening conversation today. We do truly appreciate your time.
Thank you.